What's happening, good people? So, welcome to another episode of First Generation Wealth Builders, man. I'm excited about this guest. I met Mr. Andy in Miami. We was out there with Nehemiah on a yacht and living
Yes,
it up,
yes,
man. What's
sir.
going on?
I'm doing extremely well, and thank you for having me.
Now, hey, so you coming to the mastermind. I'm thankful for having you, man. Thank you for coming through, man.
Definitely. We have to show love whenever love is given, so it has to be reciprocated. So,
I appreciate it. I appreciate it. So we was just off camera talking, and I was like, man, we was talking about who you sound like, and you sound like the dude off the Allstate commercials, man.
yes,
And you
yes.
was telling us about that.
Yeah, several years ago, because I used to do some print work and commercials and touched a couple movies, and that was one of the commercials I did a casting for. And he was actually under contract negotiations with the whole Allstate and everybody.
Wow.
And I made the final three, and they was gonna make their final selection within the 7 days. And 3 days prior to them making the selection, he actually signed a contract to extend, and that's when he actually rolled over and continued doing the more commercials. So that was gonna be one of those where life was gonna be different.
Got you, got you. He messed up
Yeah.
the church's money.
Yes, goodness, but
Got you.
I was grateful for the opportunity. It was a great experience.
Now you say you touched a couple movies. Like,
Yes.
talk about that.
Um, I typically don't talk about it, but yeah, I've touched a couple movies. Worked in Bad Boys with Will Smith and Martin Lawrence. Worked in
Which one?
Bad Boys 2.
Okay.
Worked with Gooden Jr.
Okay.
With Snow Dogs, and worked a couple other movies and did a lot of commercials and bus work and
Okay.
ads.
So, like, I mean, how'd you get involved in that? Is that something that you pursued or just got selected for?
Well, early on, when I came back from college, I had a business with my brother-in-law, and there were several people in South Miami that they would always say I look like people that's on television, and I would always say no, wrong person, and lo and behold, one day an agent, a friend, her good friend was an agent, and she introduced me to the agent, and they told me come out for a casting, and it was just one of those opportunities where everything fell in line. I went out for about 18 castings and I landed 16. 16 out of 18, which is rare. I mean, I was on a roll for a while and had a lot of great opportunities, met a lot of great people, and it was a great experience at that time of my life. And then I decided to get married, had a couple kids, and
Gotcha.
entrepreneur life took over and just went from there. But
Okay.
I still touch into it and have a good time. So.
Gotcha. Just to give our audience some context on how we met, I think it's important just because we're both entrepreneurs, and I think that entrepreneurship is a path. It's a never-ending path, as we're
Definitely.
always trying to develop and innovate and stay current in our lanes. And we met down in Miami at a mastermind with Neo. So going into that mastermind, what was your goal?
Well, my goal originally, when prior to meet with Neo, I met with a gentleman by the name of him 500, and where that came into play was I was actually in the finance business I was working in my local city, helping entrepreneurs and people in the northwest section of our city, and it got to a point where they canceled the contract, but I was still had a passion for helping people with businesses, and I came across an opportunity where I purchased an Amazon store. And within the Amazon store, I was extended the opportunity to partner up with the entity, and we were offering the service to people. But what I found out, because I was strictly working with people in the northwest section of our city, and I just wanted to be able to continue what I was doing with the city, which is help build generational wealth, help build something that parents and mothers and fathers can pass down to their children. So I thought this was a great opportunity because Amazon is still booming, and back then it was booming as well. And I noticed there was a trend. When I was working with the city, I was actually helping communities with getting funding and also helping building their business credit and personal credit. But when I started working on the Amazon side, it was a hefty price. Back then, it was at $25,000 to get the store started. Then you needed additional capital to run the store every month. And what I was noticing, a lot of people didn't have the income or the cash available to, for one, purchase a store and to keep the store running every month. So I just went ahead and tapped into what I was doing before, which was a perfect fit, which is helping people fix their credit, build their credit, and get funding. And I just thought it was a perfect match. And from there, helped several families be able to fix their credit, build their business credit, get some capital, and then get their stores going. And it just took off from there. And when I got to a place where I was just strictly working with families just to be able to purchase the Amazon store, and I got to a place when I met him 500 where it's a financial literacy program where they teach entrepreneurs how to scale their business. And I just sat there and said, okay, if I can learn how to actually put together the program where I can scale it to, instead of doing one-on-one, we do one-on-many, meaning we're talking to many people at once, then that'll just take my business to the whole next level. And
before you go too far, why do you want to go from one-to-one to one-to-many?
Because I think where much is given, much is required. And I feel I've gotten to a place where I'm extremely blessed, have two beautiful children, have a beautiful goddaughter, grandkids. And I just think I'm at a place in my life where it's time to not just reach so many people, but try to reach as many people as I can. What I've learned, especially with working with our local cities, is as far as the blueprint isn't shared with our community or in depth and shared with our community. We have this perception of building credit or actually having credit is this far-fetched thing. We have this perception of building business credit, a far-fetched thing. It's not that far off. It's just a matter of staying disciplined and actually showing and teaching people how simple it can be by just being disciplined and following the blueprint. So I put together a blueprint where I think it's fairly simple. We just have to be disciplined, and I call it we just have to unlearn what we've learned and just truly believe and know that there is a way out. Where I used to call our program "We Bank the Unbankable," and in the same process, it's a lot of people in our community just think that it's so far-fetched that they can't reach that level of having a 750 credit score, having an 800 credit score, walking into the bank and asking what you want, not waiting to see what they're going to offer you, but literally you're asking for what you want. And it's just gotten to a place where, we've helped hundreds and hundreds of families, and I'm proud to say that we're going to take it to the next level.
Got you. All right. So we definitely going to get into the credit stuff.
Definitely.
I want to learn. I want to understand. I want to understand the Amazon play, all of that. But, first I would like to learn a little bit about you. We met down there, and, I understand kind of like I got a screenshot of what you do. We definitely got good vibes. That was great energy.
Yes.
Neo definitely helped, motivate all of us in the room. A lot of us still connect. I see a lot of us, supporting and reposting each other. So that was dope, man, just to build some relationships. But let's talk about where you from?
Okay, born and raised in Miami, Florida. Attended college, Alabama A&M, and in Iowa. But after college, came back home, helped my family out. We have a family restaurant in Miramar, Florida. Shout out to my parents, Tony's Restaurant.
There it is.
In Miramar, Florida. But like you said, when we met at Neo's event, Neo's been a brother I've been following. He's part of the Circle of CEOs in Atlanta and several other places. And he's another brother I was following for a while and had the opportunity to attend his mastermind. And I think for me personally, what brought me a little closer to you with the connection, I want to say it was maybe around 10:30, 11 o'clock at night.
Oh, okay.
Me and my buddy Terrence were hanging out on South Beach, and I was heading back home, and I watched Neo's live, and he had one more spot available. Excuse me, he had two more spots available to attend the mastermind the next morning. Now, granted, it's 10:30, 11 o'clock at night. I actually told Terrence, listen, call Neo, see if I can get in, and if how I go ahead and pay. And right then and there, I was able to pay while we were on the highway driving, and he said there was one more spot left available. And he mentioned where you were coming from, as far as, I believe it was an hour later, picked up the last spot. So I was curious for the next day, who was the last person that got the last seat? I want to say it was around 12, maybe 12:30 when you picked up the last seat.
That's funny, man.
When we met, I just connected okay, this is my bro. We the last two that was able to get into the house.
So for me, I was just on Instagram. It was a random Tuesday, I want to say. Tuesday or Wednesday, I can't remember. Yeah. And it was late night.
It was a lot, yeah.
And he was just like, yo, I got a couple more seats, or hey, make it or break it. Come on, let's do it. And so I inboxed him, and we just talked via Instagram, and he basically was just like, hey, if you come down, I got a spot for you. Yeah. But for me, it was tough. I had to get my dogs together. I had to get my daughter together.
In a couple hours.
Yeah, and I caught a flight at 7 o'clock, man, to be down there. So nah, that was definitely. So when I met you, you definitely was like, wait a minute. Oh, so that was you. Yeah, so I was definitely on the other side of that call that he was telling you about.
Yeah, definitely. Neo's been a brother, literally, like, on Instagram and social media, as they say, a lot of people be capping. From day one when I met this brother, like, everything has been above board. And even as late as that live. And a lot of times people think, oh, they're just selling. They're just saying it's the last one, it's the last two. Literally, there were 2 spots because
It was packed.
my boy, yeah. And everything he's done has been solid and above board. So that was a no-brainer for me when I had the opportunity to be able to participate. And I took advantage of it. And
Got you. Would you, like, just to, I think it's important for people to understand, especially in the Midwest, man. I feel, I'll put it out there. I don't feel like the Black community of entrepreneurs is as tight up here in the Midwest as they are down south, Atlanta and Miami nowadays. What's one thing you took away from that mastermind that empowered you?
The biggest thing I took away is collaboration over competition. That was the biggest thing where in the room, there were several different businesses and entities that still collaborated within the same industry. Like, literally, there's enough work, there's enough money, there's enough people in this world where we all can literally be doing close to the same thing and still be able to make a really good living. And I just learned from Neo and him 500, where, us coming together, we literally can be doing almost the same thing and we still can thrive and succeed. And we just build off of each other.
And that's what we're doing here.
We just build off of each other and just help the next generation learn that and understand that and not fear because someone is in the same industry as you or in the same field as you. Fear of, sharing information, help each other excel, and that's what helped build. And that's one thing I've learned, especially with Neo, like, your business goes to the next level when you're collaborating and you're in a network of people in the same industry, because there's certain things you may know that I don't know. There's certain things I may know you don't know. And actually, I had this conversation with a gentleman yesterday, day before yesterday. He's a rapper in our local city, and he actually does credit repair. And she's trying to get funding he's trying to purchase commercial property. And once he shared, he's into credit repair and the attorney that introduced us, and he just started telling me the challenges he had with something on his report. And I just started sharing, okay, well, have you tried this? Have you tried this? Did you note in the letter this to the agency? Did you tell them this? And he was literally blown away, and he was so grateful. When I say grateful of actually me sharing willfully information without asking them for a penny, without asking for something in return. And I think with doing that, the cycle's going to continue. Because now this brother, I'm almost 100% certain he's going to forward on to the next person.
Right.
He's not going to be worried about, I know a secret. Right. I'm not going to share with him because I don't want him to go do what I'm doing. Listen, we all can't fix everybody's credit in America.
Facts.
Literally, we cannot. And there's enough for everyone. And he learned that, and he was really grateful. So I'm just glad to be able to keep pushing it and sharing it with everyone and just opening everybody's eyes to know that, there's more than enough for everyone to eat, and we just have to share.
Got you. Okay. So let's go to it. When you got done with college, like, what was your career path?
Well, my original career path, I wanted to be in the hospitality industry because my parents, of course, in the restaurant business, wanted to stay in the restaurant hospitality. And shout out to Alabama A&M, Bulldogs up on the hill. We were in the hospitality, and originally I didn't want to go into the restaurant field. I wanted to go into hotel and restaurant. And at that time, I wanted nothing to do with business, wanted to go work a regular job at the hotel and be the manager and run the hotel and, of course, get all the perks with, the different hotels and traveling. But unfortunately, I had a death in the family. My aunt passed away and came back, and there was some challenges within our family. So I started helping my parents, then started working with my brother-in-law. And from there, besides, I want to say maybe a 3-year period, I was a manager at Walgreens. But besides that, I've been an entrepreneur my entire adult life.
So when is this time where you're going through this? About what time is this?
I was around 22, 23.
Okay.
And about 24. And at that time period where I noticed I was going to work I was a manager at Walgreens, making pretty good money. But of course, I was a rookie working the night shift.
Mm.
And yes, it was good money, but I noticed my time. Like I was literally going home, working overnight, ran the store, um, woke up the next day, late midday, almost time to go back to work. And I was like, there has to be a better way. There has to be a better way. And that's when my brother-in-law, of course, invited me back. We partnered up again on some different projects, and it just went from there. And
What kind of projects?
we had an estate. We liquidated estates, where we went in and bought out mansions and estates, and then we resold the furniture, and yeah, we were hustling.
Wait,
Yeah.
man. All right. So explain that liquidating estates. I know
Yeah.
nothing about that.
Okay, for example, if you have we targeted the high end. We targeted the high end community in Southwest Miami, where we looked in the newspaper, the traders, the back then the Craigslist, everyone that was either moving or getting rid of their furniture with the mansions and estates. So we go in, we give them a price for the entire house, and we literally work out a contract where instead of us coming in with an 18-wheeler or a couple 36-foot trucks, we would literally borrow their house for the weekend. And we not only didn't have to move the furniture from the estate, we actually put signs out everywhere, did advertising everywhere, and people literally came to the estates, and we cleared out the house, and we made a good living out of it.
So I'm trying to follow. Is this the same? Is this similar to buying storage units that have been abandoned and not paid for, and you get the property and then you could just resell it?
Somewhat like that. What we didn't sell at the estate, we would take everything because, of course, we owned them, and we would put it in. We had a warehouse area that we rented, and people would come in and they would purchase exquisite, nice furniture at really good rates.
I didn't know there was such thing.
Yeah. Now they're actually making it a little bit more challenging because we kind of set the trend back then, and I mean we were having hundreds and hundreds of people coming out.
That's wild. I could only imagine.
Yeah, you're
like
buying
boys
high-end
tackling each other to get the couches.
Yeah.
Like that's my couch. Nah, that's my couch.
Yeah,
Okay.
we had some pretty good deals back then.
Wow. No, I bet. Okay. So what's the next part of your chapter after that?
Well, after that, we kind of split ways, went in different directions.
Okay.
And that's where I started working with building my own things. Of course, I kept on doing it with the furniture, but I went in a different direction of how I was selling it. And I went more towards being exclusive with certain people, and my name started spreading out. And then from there, it kind of shifted off and just got married, got into the acting. That's when I was introduced to the acting, and that took over. And I was doing that full time for several years, and then got married. And my wife wanted to go into the hospitality with event decor. And of course, I went with that, being an entrepreneur head first. With my parents having a restaurant, we catered events. I did that, and we scaled her business really, really fast. And we ended up doing, they call them, work with destination management companies, where we strictly, after about 2 years, we scaled to the point where we were fortunate enough where we were able to just strictly work with Fortune 500 companies. Whenever they had retreats, whenever they had their annual meetings, they would come down to South Florida, South Beach, at the major hotels, and we would take care of the weekends, because that's something I've always been thinking outside the box. How do we scale? How do we do things a little different? Because we started off just doing weddings and just doing parties.
Did you own a venue or did you lease a venue?
Well, we didn't actually own anything. We almost had the model of right now with the
Neil's doing,
and where we had facilities that we referred people to, and at times we had facilities booked without us paying for it, where we literally had clients we had clients come in, and they would say we had specific locations. We would offer it to them. When they paid us, we paid the facility.
Got you. So you didn't have a monthly rent.
No.
You basically sold a proposition to somebody, gave them a couple, maybe a 1, 2, and 3. You select, and then from there you selected a venue that fit their size and their necessities.
Definitely.
So when they paid, you didn't seat the property.
Exactly.
Low overhead.
We were at a place where we were doing up to 6 to 7 events per weekend.
That's a lot.
Yeah,
it's a lot of stress too, a lot of manpower.
It was a lot. But then when, my kids got to an age where, which is something I'm always big on, and I always told my wife, my ex-wife at the time, where whenever my children got to the place where they wanted to, because we worked a lot of hours. We worked 5 days. We worked all week to get ready for the weekend, and it became a lot of stress, but it was fine. But actually, when my children, I'll never forget when my daughter said, "Dad, why can't we go to the park? Dad, why can't we go?" I get emotional every time I think about it. And when that day came, I told my ex-wife, "Okay, listen, we're gonna have to find somebody to take care of what I do day to day. I'll be here for certain periods of time, take care of logistics," and was just able to do that from there. And
Got you.
stayed with my kids a lot, and got into coaching them in sports, and of course,
Nice.
I was doing fairly well, and just went from there.
Nice. Like, I have a question about your system. Did you ever think of owning a building or leasing a property to basically have a home station for your events?
Yes, we actually did, but then when I did the numbers, it didn't add up. It was a lot better having different facilities because at the time, all the facilities were in competition with each other, and I knew if I would have gotten a space, it would have limited as far as the income we had coming in. As strange as it sounds, because the other facilities would have no longer rented to us. They would have no longer allowed us to come in to do events.
Because you would have been a competitor.
Exactly. So we just kept it at a place where we had 5 or 6 different properties that we worked at, and it just kept us busy.
Now, I got to bridge this just from my mindset. I think real estate. Like, have you ever thought of doing like an Airbnb model like this?
Yes. Well, actually, you mean for event space?
No, well, that's we could go there. But yeah, have you ever thought that? Let's go there first. Have you ever thought of continuing that for event spaces?
Yes, actually, I have a cousin, Vlad. We're now in the process. We're looking for properties and condos to be able to rent out to do Airbnbs. We're as I say, we're doing it the right way. It's a little challenging because with the whole Airbnb and what's going on with COVID, but we're in the process.
Arbitrage, right? That's what it's called.
Yes.
That's process called arbitrage.
Yes.
Now, with your event spaces, when you talked about scaling, basically you would have been only having one event venue. You would have been cut off by other competition because they would have been like, no, you're the owner over there. Like, I'm thinking, had you ever considered owning multiple different buildings?
Now I'm at the place after meeting Neo, and he literally gave us the blueprint, and that's something I'm planning on doing. Now I'm planning something I'm going to do after I settle in with the Airbnb. And actually, about 3 weeks ago, I ran the numbers, and literally, event spaces in most cases make more than the Airbnbs, believe it or not. So that's something I'm gonna eventually do.
Got you. All right. So, how did you get into the credit business?
Yes, with the credit. When my ex-wife and I were going through our divorce, initially we wanted to get some funding. It was a challenge going to a bank. We were at a time, it was a bank we were for about 4 or 5 years with this bank, and we were depositing easily 6 figures into the bank every year. And it got to a place where I'll never forget. We went in to go and try to borrow about $40,000 or $50,000 to get a refrigerated box truck, and I didn't want to use the cash we had on hand. I just wanted to see if they can finance it or give us a loan for it, and they denied us. And I just couldn't understand why. We had good credit.
When you say good credit, what's good credit?
We were both over 750.
Okay.
We both had at that time 2 American Express cards. We had a business and a personal, they had fairly great limits. So yes, we could have purchased the trucks outright, but to me, the blueprint back then was use other people's money.
Why?
Well, mainly because for one, you always want to have what you have on hand for opportunities that can come. And I was never one that looked. And I have a system in my head where everybody has to eat. If everyone takes a little bit, everyone makes more. If you want to be the one that eats all, you're going to end up eating less. So I always,
Hey, I call that eating the chicken. You know what I mean? Like when you want to eat the whole chicken, there ain't gonna be no more next time you want to come back.
Exactly.
Yeah.
I have a saying where if a monkey's hungry once, it's gonna be hungry again. So you better share. So yeah, I didn't want to liquidate all the cash that we had on hand, and that actually just got me to thinking, like, why aren't they lending us money? And that's when I found out, and I'm going to talk about it tomorrow at the mastermind. Banks are not in the business of lending. They literally are not in the business of lending. Yes, they advertise it, but that's only because by law they have to.
I didn't know that.
By law, they have to advertise. They have to lend by law, but
So
they don't restrict. They don't restrict them on how much they can lend.
Right.
The percentage, as of about 3 years ago, was 1.2%. On average, with the amount of money they have in the bank, they're lending 1.2% of the money out.
So explain to me, what are they in business for then?
They're in the business of making money, where we're depositing our money in the bank, and they're using that money to purchase more properties, to purchase more land, to do different things, and everybody's getting their returns. And you know, the higher end, I call it the higher up the ladder, getting their dividends. And
Makes sense.
but banks are not in the business of lending money to businesses, because
Makes sense.
we all know that business is a high risk, high risk, and the rate of businesses not succeeding is extremely high. So for that reason, they're not in the business of lending money.
Makes sense. But, you know, one thing that's also true is that any city you go to, no matter what city in the world, the biggest buildings have banks on the names of those buildings. So, you know, that makes sense.
And if you look at the returns, as far as, for example, when you go into a bank, the interest they're charging you, when you do receive a loan, what's the interest you're receiving when you put your money into the bank?
Less than,
what is it, 0.000?
Yeah, 0.001%.
So yeah, when I learned that, that's when we were fortunate enough in our city, we had a loan fund program. Okay. And I went in to apply, and me being a male at the time, and I went through the whole process with the paperwork, and I knew what I knew as far as business wise and how to manage it, and you know, doing the whole business plan. For some odd reason, I wasn't approved. It was for $25,000 loan. I wasn't approved. And
how'd you feel?
I was confused. Okay. I was one. I'm from Haitian descent, and my dad instilled in all of us, we made no excuses. Okay. Where we came to America, he built what he built, and he didn't make any excuses. He went to work every day. We all were afforded certain opportunities. But for some reason, I kept on thinking it only came back to one thing. I was an African-American male that was outspoken, that I shared a lot of information in the class, and some of the people took it the wrong way.
I bet.
But because at times my delivery can appear to be strong. But lo and behold, went through the process, didn't get approved. Then I decided to put my then ex-wife through the process. And because I was doing the catering, I had one company. Okay. She had her event company, which was a totally different name. And of course, I did all the paperwork, did all the business plans, took care of everything. She just physically attended the class, and she was approved.
Now, I might ask the same question again. How did you feel then?
I started to learn the systems created a certain way, and you have to make adjustments. I didn't make any excuses. I didn't say, forget this program. I didn't say I'm not, because we had a family we had to feed. And we just adjusted. We didn't compromise our morals. We didn't do anything illegal. We didn't go say we're not going to do this and we're going to go in a different direction. I call it, we ran the play. And
so what adjustments did you make?
The adjustment I made was, okay, if the female's going to get approved and she was of Caribbean descent, we put a female in place. And literally I did all the paperwork behind the scenes. She had a great presentation. She was gifted with her talents. And I was the brains behind it, but she was the physical hands with the talent. And we got approved. And literally the day, and I shared the story with the city, that's what is going to lead me to what I'm going to share. When we went to go sign our loan documents, we were approved for $25,000. They initially gave us $15,000 because the program was geared towards people who weren't able to go into the bank and receive funding, so you were still considered a risk, even though we had great credit and we had successful business. They gave us a $15,000 loan. We were approved for $25,000, they gave us $15,000. But when I went over to sign the documents, I literally stopped at the conference table in City Hall, and I said, why are we paying a full note of $426.15. We're only getting 15,000 out of the 25. The 426 was supposed to be for 25,000. And they explained, well, you're going to get at a later time. You have to show maybe 3 or 4 months worth of payment. And then we're going to give you the additional 10,000, which I was fine with. So I posed a question. So within the first 3 months, why are we paying a payment? And the document shows that we receive 25,000, even though we're receiving 15, and it shows we're going to get at a later date. The documents weren't proper. They weren't written out correctly.
Wow.
And the same director that, was the way she was with me when I went through the program, she took a step back and she gave me a call about maybe 3 weeks later. She asked me to come in to consult because she noticed I had some information, regarding the program. And I worked part-time for maybe about 2 or 3 months. And that's around the time where my wife and I was going through some challenges with the business and our relationship. And within 3 months, I was the loan director of the program. And that's literally how I got into funding. Because prior to that, I was proficient in writing business plans. And to me, a business plan, and I still call it till this day, a business plan is you telling your story. You're putting your business story on paper. You're doing your research. This is how you're going to make your business work. You're literally telling a story.
So when I was younger, and I wanted to start her hair company, I wrote this big, elaborate business plan. And, it was lengthy, like 10 pages. Today, I just break it down now into a 1-page, kind of like, just because things change so rapidly that business plan is not going to hold true. And to go through and modify that every time, it's just a lot of work. I mean, do you feel that or not?
Yeah. Well, the business plan is more, once you have the meat of it, I call it the meat of the executive summary that tells the synopsis of the entire story. And a lot of lending institutions, they don't typically look at the business plans, but it's when you're going into venture capitalists and private investors, they're going digging into the business plan.
Fair enough.
But we went in and I was able to help the program, and I was able to help people write the business plans, and I restructured the whole loan contract and just learned that firsthand. And our board of directors were actually vice presidents and presidents of our local banks, PNC, we had Wells Fargo, we had Bank of America. They were actually consisted of the board that reviewed all of the people that were applying for loans and coming forth. And I just got everybody prepared, and I actually received a couple awards and just for the success the program was having. And over time, we started having challenges with repayments and things of that sort. But overall, the business I consider was a huge success because I called it we banked the unbankable. And we were fortunate to help plenty of businesses start restaurants in the community that are still currently open. We have one young lady, her name is Keisha. She has a national branding company where she works with cosmetics and beauty products, and she does national campaigns. We have a cleaning service where they do trash hauling, something similar to the ones that come out and pick up the bulks at the home. So we had several businesses that really succeeded, and they really thrived through the program. And that was the start of me with the business funding and helping people put money together. And I was actually offered employment by 2 of the bankers. And at the time, the salary wasn't comparable to what I was making as an independent contractor with the city. And I got some coaching from my then administrator, which probably she didn't want me to leave, but she just told me how numbers driven it was. But that actually boosts my confidence into knowing that's something I just naturally knew. It was just natural, like playing with numbers and telling the story and just encouraging and empowering people in our community. So that's something that I just stuck with, and here I am today.
Boom. So how did that empower you to now do what you do today?
Well, when they canceled the contract, I still had the passion of helping people get funding, and I was actually working with one of the local banks where there was a young lady in the city. She had a aged out foster care program, and she was, just because of the relationships I built with the bankers, I was able to leverage the relationships, and she was able to come in, and she was able to get 2 fourplexes, and just off of me helping her put her
2 fourplexes. Yeah. So you talking about she got 8 doors.
8 doors.
With your assistance and funding.
Yes.
All right. Now that's dope right there.
And I literally remember till the day, shout out to Jackie Reed, at the the ribbon cutting.
Okay.
The press was there, and I just remember standing on the side, and I was just in awe, like I had something to do with this. As many bits I helped in the past, and with different things I did in the community, with with the redevelopment that was going on in the community, that was one of the most impactful feelings. Where she was telling the stories of the kids that were going to be coming in and that were going to be housed there because they were aging out of foster care, and I truly saw the impact of something I did naturally, where
Got you.
it didn't feel like work. And again, it was just you telling a story and you putting it on paper.
Cheers to that, man. Go ahead, man.
I
Cheers to
appreciate
that.
I appreciate that.
Got that man on Angels Envy. Taste that, man. Let me know how that is.
Oh yeah,
Yeah, I told you.
that's pretty good. That's
Yeah,
pretty good.
yeah. Let me go for a second one. I love it. I love it. Yeah, yeah.
But yeah, that's real good.
Mm-hmm.
But that actually, for something that was so easy.
Yeah.
And, I don't consider myself a writer. It takes me a long time to write.
Okay.
But I've learned when you put good people around you, and I tell the story and be able to put it down on paper and put it together, and that impact I had, how it impacted me, is something I'll never forget. I mean, literally, I'll never forget. And until this day, when I'm helping people and sharing information and just helping people, it's a great feeling.
Cool, cool. No, that's a dope story. Yeah. That's dope, man. Like, so let me ask you. We're now getting to know each other. Mm-hmm. But I'm a new investor. I want to start investing into real estate locally here in Indianapolis or anywhere in the country. And let's just say my credit score is what's the average credit score for a person right now?
Right now in our country, the average score is around 660.
660. Mm-hmm. My credit score is a 660. What approach are we taking for me to get my first single family door?
Well, with a credit score of 660, because I know how the process works,
Okay.
I would first evaluate your personal credit report. And if you're going into as far as investment, my first question would be, do you have a legally registered business?
I do.
Okay, you do have do you have business credit?
No.
And in most cases, they don't. The first thing I personally tell people is, one, you want to build out your personal, meaning you want to structure your personal credit to a certain place where you build it out. You're able to fund whatever you need to fund personally, getting vehicles, getting homes, and so forth. And once that is structured, then you're able to go and use your personal to leverage for your business. Okay. Then when you're able to build out the business, because how great your personal is, you're going to use the capital that you're getting from the business to pay off all of the personal debt that you have.
So wait a minute. That was kind of fast for me. So let me bring you back in a little bit. So my credit score is 660. That's the average credit score. What's a goal from 660 to get to for me from that point?
From 660,
depending on what I got on my credit, is unique to everybody. Mm-hmm. But let's just say no bankruptcies, just a late payment here, late payment there, or lack of credit cards and lack of debt, maybe.
Well, my first goal is to legally dispute what's on your credit, because you can legally challenge, because by law you can challenge whatever's on your credit report. And we're going to try to get as many things updated on your personal credit to be able to help assist with building the score. And then we're going to leverage your scores with getting either additional funding, credit cards, to help put you in a position where the more, because you need about 12 to get a stable and be deemed bankable with personal, you need between 10 to 12 trade lines. Trade lines are actually items that's in your name. Nowadays, it's really big with AUs, authorized users. Banks are now catching on to that. So I always highly encourage everyone, get as many items in your personal name as
well,
much
hold
as
on,
possible.
though. I'm going to go back. So let's say I got 2 credit cards. Mm-hmm. You telling me I got to go get 10 credit cards?
You don't have to go get 10 credit cards. You need 12 different items of different type of revolving funding, different type of trade lines. You can get a vehicle. You can get a mortgage. You can get a credit card. You can get a secured card. You can get a line of credit. All those are different type of different type of trade lines that you can get that helps build your credit score. And once we get you, which is not going to be that challenging to get you over, say, a 740, 750, that's when we're going to then be able to really look at your credit report. And depending on how much you're looking to obtain to get the property, which in most cases you're probably going to be looking for over maybe $50,000. We then have to intentionally look for items to put on your credit card and go after certain credits to be able to match it when you go for business. Because what banks do is, if you have a $500 credit card, banks are not going to give you a $10,000 credit card because the most they've ever seen you handle is what? 5,000. So if we have to go in and secure another 5,000 or 10,000 to be able to leverage that, that's what we're going to do. Once we get your personal credit to a certain place where we know we can get business, because business, they give you 2 to 3 times of what you have on your personal. So that's the reason we build up your personal to be able to scale your business that much faster. And once again, you get the business funding, then you're able to pay off your personal debt, and then you just leverage your business funding. Because with the business, they don't look at high utilization. They just look at your monthly payments every single month.
So what I hear you saying is this: on my personal credit, I need to obviously keep if my limit is $10,000, the max I can spend every month is really $3,000.
3,000. I like to recommend under 20, under 2.
Under 2,000, so keep it under 20%. All right. So you're basically saying that you need to keep your utilization at 20% to really maximize your personal credit score.
Exactly.
Now, on the business side, you're saying that if I had a $10,000 card, I could max it out
$9,999,
and I would not be penalized with a negative ding for utilizing it completely.
Correct.
Okay.
Because on the business side, they only look at and make sure you're paying it every single month. That's all they look at. So that's where it's best to leverage your business to be able to scale it when it comes to your personal.
All right. So a lot of us don't come from that type of exposure. Just being honest with you, you know what I mean? And in this podcast, First Generation Wealth Builders, my goal is to allow us to go from those positions, have conversations, you know, that the audience could witness, and to expose them to the mindset. A lot of us, though, are used to working and saving our money. A lot of us, you know, dream of not having a car payment. I have 2 cars. One is a luxury vehicle, and I've elected not to have a car payment just because I don't want the debt for my debt ratio. And so you're saying, oh, you need a car payment to help you out?
To reflect their credit, to show that you're actually responsible. They want to see that you're able to make payments. There are strategic ways, for example, if you're going out to go get a loan. Yes, for example, same you can apply it to the car as well. If it makes you mentally feel more comfortable, when you first get your car, accelerate the payments, make bigger payments. But then when you get to a certain place with the car, is either you refinance it and or you put it at a place where you're going to have to make payments for a certain period of time, because that's what helps your credit score. If you get a car and you pay it off in a year, that doesn't help your credit.
Gotcha. So when you say refinance, though, just so that we don't go over nobody's head, you're saying basically if your car is $20,000, your payment is $600 a month, go ahead and pay, you know, $1,000, $1,500 over. When you get it to a point where now you only owe $10,000, you can now refinance the vehicle, put it on a 5-year term. Now your payment, instead of being, you know, $500-$600, it's now $200.
If that makes you feel a lot more comfortable, yes.
But now you have the recurring payment and building the history because you have some type of credit.
Exactly.
Okay.
And the other thing that people can do is called swap a lease, where that's one of the strategic ways I share with a lot of my clients. For one, you can drive luxury cars at a discounted rate. Swap a lease is a company where you can go in, cars that are coming off lease. So, for example, if you want to drive a 7 Series BMW, you can go into swap a lease and you can find a car anywhere in the country. Instead of you getting a 4 or 5 year lease, you can go find a car that only has a 2-year lease. And the payments are going to be a lot less than a car that's, you know, right off a lease. And you're only going to have the payment, but only for so long. But the key thing is that helps build your credit. That's the biggest key. And we other have strategic ways of helping people, you know, build their credit and also make additional revenue. For one is, and I'm going to share this with the audience tomorrow, is where even if you go on swap lease or you go with, now you're familiar with the electric cars, the small electric cars, where if you have a business, go ahead and purchase a small electric car. The two-door cars. You go ahead and you purchase the car off of Swap or Lease or wherever you're going to get it from. You're going to probably be paying less than $250. You take the car on the hood. You advertise your business on it. You go knock on a couple doors and you ask the business owners, would you like some free advertising? Would you like to have your business be seen by 10, 15,000 people a day? And how do you do that? Where you put your marketing on it, you go door to door, you sell it to different businesses. One can get the passenger door, the other one can get the driver's side door, the other one can get the trunk, the other one can get the window. And then you go get, now everybody's familiar with Uber Eats and all the car delivery services. You go and you get a driver. And literally you tell the driver, listen, I'll rent you this car for whatever X amount of dollars per week. They have them a hire car, which I think the rate is about $35, $40. So imagine you go out and you get a driver, and they're providing meals for their family, which they're out driving. Literally, you're renting the car out to a driver. They're paying you $35, $40 a day. They're driving the car all over the city or a certain area with high traffic. They're now paying you they're paying your car payment, and then on top of that, you're renting each section of the car. You wrap it with the different businesses. They're going to be paying you additional. So there you have it. Your car's being paid and you're earning additional income. But the biggest key is, one, you can either put it on your business to help build your business credit and or build your personal credit. So you're actually getting a car to help build your credit, you're earning an income with that, and your car is going to get paid off.
Nice.
So it's a win-win-win-win all across the board. So that's play.
He talking spicy in this thing. I hear you, bro. Okay. All right, I'm gonna repeat that back. Make sure I got it because I'm a little retarded. I go to Swap a Lease. If I drive an S class. I want a new one. I go in there, Swap a Lease. Got me a new boy S. AMG. Okay, and I'm gonna take over wherever they were at. Gotcha. Well, with the balance at.
Balance of the lease, correct.
Boom. Okay. And that's anywhere in the country.
Anywhere in the country. You find it wherever you put it into the system. You find it what you like. And from there, they're going to ship the car over. Once you get approved, they ship the car over to you. And you start driving it. Instead of you having a 4-year lease, you have probably a year or 2-year lease. And there you go. Every 2-3 years, you're driving a different brand new car.
Oh, got you. I might have to exercise that. Yeah. All right. Now, so... got that. We now have funding. I got the credit cards now. I got personal. Let's start with personal. I got credit cards. You helped me get credit cards. Because now I was at 660. I'm on 700, 720. Let's just say 720. I got 4 credit cards. I got limits of $15,000. I want to purchase real estate. That's just my situation. How would you help somebody like me? I have $10,000 liquid. I got 4 credit cards that have $15,000. I want to purchase a property. The property is $100,000. How are we going to acquire that how would you guide me through that?
With our program, you can go in 2 ways. Either one, you can work through a hard lender, which that's another strategic way of, even with bad credit, that you can still be able to acquire the property. What's
a hard lender?
A hard lender is private people and or companies that they're fronting in most cases 80 to almost 90% of the project. Either if you're rehabbing it, the purchase price, and as the projects are being worked on, they distribute a certain amount. Different hard lenders work different ways. They pretty much front the money and they work off of points, which is interest. At times it can be a higher interest rate,
right?
But then it goes back to that same concept I had before. For one, everybody has to eat. And 2, you're acquiring funding that you would have never been able to obtain. So you're making something instead of nothing. And in most cases, you're making more than you would have made, period, because you're actually able to leverage and get funding over funding over funding. I've known some hard lenders giving each individual person up to 5 to 6 properties at a time. And in most cases, some people aren't able to obtain that type of funding through traditional banks. So they would go through hard lenders. And
so you have those connections.
Yes.
Me calling you, you could connect me with some private money lenders for some deals right now.
Today, inexperience, no experience in rehabbing, no experience in purchasing real estate, we can start you off with a $350,000 budget. As long as the property has equity, which means it has a cushion of if something go wrong. Because this is what we have to look at. they're in the business of making money.
Facts.
So even if you get to a place where you can't handle the project, there's equity in the property. They can come in and just take over the property. So it's a win-win for them. It's either you're going to pay them their interest and they're going to be making money, you make your money and you keep it moving, and or if you want to hand the property back over and you call it even, they take over the property and you finish the project. It's a win-win. So that's where we're at a place where we're able to, one, help people build their personal and business credit, and or even if you're starting off and you don't have it, we can still get you started. In the meantime, but I always still encourage people, yes, you have access to funding without having good credit, business and or personal, but we still encourage people to build their credit because that's how you maximize and be able to scale and build generational wealth, because you have to be able to acquire and to be able to leave and pass it on.
And so what I heard was, Eric, yeah, you got the 10,000, yeah, you got the 4 credit cards, but I don't even want you to use them. Come to my private money lender or my hard money lender, and he's going to take care of you as long as you got some decent equity in the deal. We'll make it make sense. What some people don't understand is that, especially young entrepreneurs, and we'll talk about this tomorrow at the mastermind, is that in those situations, you're actually the lender's like a mentor because they will evaluate the deal a second time to make sure that they will lend to it. If they decline the deal, that means it wasn't a good deal for me anyway.
Exactly.
Yeah.
Exactly.
So that's a great way to leverage a private money lender.
And what happens a lot too is when you build that relationship with not just the banks, but even the hard money lenders, over time, they're going to lower their fees. Mm-hmm. So if they see that they're going to be getting consistent properties on a monthly basis from the same person, they're going to give you reasonable rates. Where, to me, it's almost better than going to the bank.
Boom! So, I love it. I love it. I like that. I like that. All right, so let's move forward. I now got the 12 credit lines, however we got them. You personal know, everybody's side. Different. Yeah, personal side. All right, what's the process into, taking me to the business side and leveraging, allowing me to leverage it for my business?
All right, there's 2 ways. One way, and then which is a traditional way, is you go through the different tiers, where there's tier 1, tier 2, tier 3. And what those tiers are is you initially start when you're building your business credit. Of course, you register it, you get an EIN number, which is the legal entity number for the business. And with that, you get your first tier, which are the basic Granger, the different, they call them net 30 accounts, where you're paying them every 30 days. And when you're paying them every 30 days, where you order office supplies, paper towels, and different type of things for the office. And one misconception a lot of business owners have when they're doing those tiers, they feel as though when they say you have to have it for at least 3 months, they think they have to purchase it every 3 months, which is not the case. You just need to make one purchase, and you're making the monthly payments every month for 3 months. So that's the first stage. Once you get past the first stage, then you get to the second stage, which is where you're going to get the gas card. You're going to go get the Walmart card, which they offer gas cards as well. You're going to get those smaller cards, which is going on month number 2. And from there, for tier 2, you're going to build from there. And once you start making those payments, then that's when you go to the Office Depot. And then you go to the Office Depot, then you go to the Home Depot, then you go to the Macy's, you go to I don't know if Sears is still around, but then you go get those type of department store cards. And then that's when you're able to leverage it. Once you get past that third stage, where you're then able to walk into a bank and be able to request funding. And even in between there, we have some strategic ways of using secured loans where you can leverage it to help accelerate that process and help build your trade lines for your businesses.
Understood.
So it's a process. It's a process. But and the second way of doing it, I didn't mean to interrupt you, is the way I was sharing earlier with you, leveraging your personal credit from the start. And yes.
So is my Social Security attached to it, though?
Yes.
Okay.
But how I share with people is you have to have a plan. You can't just do it willy-nilly and you don't actually have a plan, which is where the business plan come into it, which is where I believe in, you write everything on paper and yes, you can make changes, but you have to follow a plan. Once you build your personal and you're able to leverage it to be able to get business funding, you use your business funding to pay off the personal debt that you acquired. And that we deal with a lot of banks at some point within 2 to 3 months, we're able to take off the personal guarantee and leave it strictly for the business.
So I could just call them back and be like, "Hey, take my social off.
Exactly.
Let's do EIN only."
Exactly.
Got you.
Exactly.
By then, though, you got a DUNS number or something, right?
Exactly.
What's the DUNS number? What's the purpose of that?
The DUNS number is something they use to leverage. It's almost like they look at the DUNS. Dun & Bradstreet is an entity where the banking institutions go to look at your credit report. Just like with the personal, we have Equifax, Experian, TransUnion, and some of the third parties. DUNS is equivalent to that for businesses. For businesses as well, they have NAV and also Experian that they go to use to look at the business credit history.
Got you. Okay. Now, I got that line of credit. Let's say Lowe's card. I got an Amex Gold card. Let's say I got a limit of 25,000. I know that's something you briefly talked about. You was like, "E, I know you got some good credit, but I'm trying to get you even more money." What are the tactics that you use to expand the business credit line?
Well, one of the tactics we use is banks want to see that you're spending money. Banks want to see that you need more money because what they're banking on is, for one, you need more money and you're not able to pay it off
In time.
in time because they're going to be charging you interest on it. How I teach people how to leverage that and to accelerate getting your limits up is, for one, we call it manufacturer spending,
Okay.
which is where I call this a play, where you can go into a department store, correct? You go in and say you want to purchase a television. You go in and the television is $1,200. You go into the department, you purchase a television, you give them your credit card. Yeah, if it's $1,200, you put $1,100 on your credit card and you put $100 on your debit card. And you tell them, okay, is either you walk around the store, after you purchase it, you have to walk around the store, you come back a couple of days later and you change your mind. And when they ask you, okay, sir, where's the receipt? You give them the receipt. And when they ask you for your credit card that you use to purchase it, you don't give them your credit card that you use. You give them your debit card. So there, when you give them the debit card, they give it back to you. One, you're going to be getting cash back that's going to be going to your debit card. You still have the bill on your credit card. So one, you're going to be getting the points for your credit card, either traveling, cash back, whatever, you're going to get that. And two, when they give it to you back on your debit card, you then use that to pay back your credit card. You don't just go spend that, you use that to pay back your credit card. So if you do that a couple times a month, you're going to be spending quite a few $1,000s a month. So then the bank sees that, and what are they going to do? He's spending money. We need to give him more money. That's how you accelerate getting your interest, your credit card balance. That's how they raise it for you, because they're going to see a consistent spending on a regular basis, but you're not really spending the money. You're actually giving it back to them. It's just how you're giving it back to them. And we have some other strategic ways of actually spending and so forth. But that's one way of doing that. And even and I'm going to share it tomorrow with the audience, especially with purchasing real estate. So if you have a $25,000 American Express, you have a $30,000 American Express, literally you use that exact same play. You go into the department store.
I'm going to be taking shit back, though. I'll be using the wood.
No, but if you go purchase a television. They give you, say you want to decide you want to go buy two fish detectors for the boats. Those cost about maybe $10,000. You have a $25,000 credit card. You order your fish detector online, costs you $21,000. It comes in the mail. You return it back to the department store. They're not going to ask you for the credit card you use because you ordered it online. They're just going to ask you the credit card that you're going to return the money to. You give them your debit card. You spent $21,000. Then they're going to refund you back $21,000 on your debit card. You still have a balance of $21,000 on your credit card. You use that $21,000 cash that's on your debit card, because of course it goes to your bank. You go buy your property with it. You understand? So within 30, 40 days or whatever, 60 days, you have your funding to purchase your property, put a down payment. You better work it, because you're going to have a payment for one coming up on a property and two for your credit card. But you then have $21,000 cash from your credit card.
Turning credit to cash.
Exactly. And then once the property closes, yes, you're going to have a high utilization, but it's your business credit card. And even if it's your personal, because credit is supposed to be used for a purpose. If you have your credit and you're using it for that purpose for that period of time, it's okay. Your credit score is going to drop because of utilization. But once you pay off your property, you get your funding back, you pay off your credit card, you move on to the next project. But there's your $25,000 for your down payment. And a lot of people have credit, but they don't know how to use it. You know what I'm saying? It's just a matter of how you use it. So that's another strategic way of actually getting credit to cash without you paying the cash advance and so forth. So
got you.
and it's all legal, by the way. That's nothing illegal about it. It's all legal.
Hey, my kid's gonna be like returning shit every day now.
No, actually, that's big business now. That's big because people are getting a lot of reward points, and there's an app. I forgot the name of it. It escapes me. But they literally give you points. No, it's not Discover. They literally give you points and coupons, and they give you cash back for you spending on the app. The more you buy on the app, they're sending you a check. And what you do is you don't deposit check, you go cash your check. You're getting your cash back, and by the time you return all the furniture, all whatever you're buying. Yep. Yes, it's big business. It's
All
big
right.
business.
So now I need some mentorship. You know what I'm saying? I definitely appreciate the real estate connection. As like I said, here we're trying to, utilize your skill set and empower us in a way to we can leverage it with real estate. But now I need some one-on-one time. I have her hair company. On average, we order $30,000 to $50,000 worth of hair. I use a Amex card. I have a platinum card that has a $100,000 limit, and I also have that's a charge card, and then I also have a credit card that has a $35,000 limit. That's a Delta card though. All right. So I love to travel, so I tend to use a credit card
Exactly.
for my Delta points,
Travel
right?
for free.
Yeah. All right. So once I make the purchase, I then pay, for the hair, probably by 5-6 days. I pay it every Monday just to kind of stay current. You know what I mean? I don't wait to the bill. I just pay it every Monday. So remember, I have the platinum card and I have a Delta, but I like to use the Delta to kind of build up that. Once I'm like at a great place there, I didn't start using the platinum points. But I have other businesses too. And so let's say the platinum card has a $100,000 limit, but I have like a gold card and I have a platinum card for another business. They tend to merge that balance within one. Is that true?
With the different businesses? Yeah. Well, if I'm understanding you, you're using the same credit card for two different businesses?
No, I would never do that. I have a her hair company platinum card.
Okay.
Then I have a St. Castle Investment Group platinum card.
Okay.
That $100,000 balance, if I look at my Amex account, it says like they tell me I have no limit, but I could check my expense ratio. They'll be like, you have a limit, but it isn't a limit. She says ballpark around $100,000 overall for my 3 businesses.
Okay.
Are you familiar with what I'm talking about?
Yeah, I am familiar with it. And what it is once they see a history and a pattern, you can literally call them in and they'll extend it for you.
But that will extend it for all the cards in essence in one pool.
Well, it'd be the one that you're spending the funding on.
Gotcha.
For example, one of my partners with the Amazon, he's literally paying American Express over $500,000 a month. He's sending them a check for $250,000 every 2 weeks. So the more you spend, they're gonna raise the limits.
I spend, so we need to call them before you leave. And I'm gonna need your voice when you get on there. You be like, "Hey, this is Eric Armstrong, and I'm gonna need increase of 100,000 today." We're gonna do that before you go.
The biggest thing is, and I tell a lot of my clients is just share with them where you're exploring different opportunities, and you've been offered different opportunities, and because you've been with them for X amount of period of time. You're giving them the option and the opportunity to either match and or exceed it. I always tell everyone go $10,000 above of what you really want. And from there, because they're not going to want you to leave. If they're seeing you leaving, they're not going to want you to leave. I mean, once you have a consistent pattern and you have a good history with them.
So you literally say something like, hey, my business is growing. I need this limit, or I'm going to have to make a different choice.
Well, hey, my words are a little different. Hey, listen, I've had a great experience with you guys, but this is where my business is going. We're thriving. And when I initially signed up with you guys, I was told that, you were going to grow my business. And I'm now at the place where my business needs the additional capital. You can look at my transactions. You see the growth pattern. I've been offered different opportunities with other cardholders, but I'm extending this offer to you first. So I'm looking to extend my credit limit by $10,000 or whatever more, and you want them to explore the opportunity. And if not, then you have to go. You're gonna have to accept other offers, and there's a pretty good chance they're gonna give you the best that they can give you. And if you're happy with them, you stay with it. And when you're done, you literally call the second card and you tell them the exact same thing. And there you go. Within a couple hours, your limits will probably go up 20, 30,000 among several cards.
How often do you do that?
I recommend that almost every 3 to 6 months within that period. Some of them, yes, some of them do have guidelines, but if you're spending it, they're going to give it to you.
All right, man. Yeah. Woo, that's a lot that you put on us. So let's talk about your company. Who do you specifically help? Like, what do you do? Like empower us. What you do? How do you help us? And how can we contact you?
Okay, my main thing, and it's something I'm really passionate about. I have a non-for-profit, Save Our Boys, that I near and dear to my heart. We work with 2 schools, and I was fortunate and blessed. Prior to Barack Obama leaving office, I was honored with the Barack Obama Lifetime Achievement Award, which is something I'm extremely
super dope.
proud of.
Super dope. Cheers! I gotta take a drink on that, boss.
Definitely. Yeah, that's something I was extremely proud of with President Barack Obama. I don't know him on a first-name basis, but I was honored with that award. And the reason why I share that is because with everything I do, it's service. Service comes first. And before I even mention my for-profit businesses, I like to share my experiences with my non-for-profit because that's where everything comes from. If you're not offering service open-heartedly, then you're limited, in my belief, to a certain degree. But with my for-profits, I can be reached at Andy Cherenfant, ANDY CHERENFANT _ on Instagram. I have the Cherenfant Group, and my business funding organization is called intentionalfunding.com, which why I'm passionate about the name intentional is because everything I do is intentional. You know, we don't leave much things to chance. Yes, when you follow your inner spirit, it guides you, but you're going to have to take intentional steps. You're going to have to be intentional with literally getting up. You have to be intentional with walking out the door. You have to be intentional with how you greet people, how you carry on. So with intentional funding, it's with some of the things I shared, certain things are intentional. It doesn't happen by accident.
Right.
Yes, it happens, but you move forward and you make it happen. But yeah, I can be reached there, and we do the funding. I have a mentorship program that I'm starting next month where we're going to be mentoring, and we're only going to be taking a limited amount of people. I'm going to cap it off at 10, only because I want to have that. Yes, it's not one-on-one. It's going to be 1-on-10 or maybe 1-on-15, where I give that custom help and scale out businesses and be able to get them maximum as far as funding. And we're accepting people with, no businesses. We're helping them establish their business to be able to get funding. And my goal is, and it was set about maybe 2 years ago, of helping 5,000 families. And I've now broken it down where I'm learning to pace myself at a certain place to be able to maximize, to help people expand and to be able to grow in the right way. So, my goal is reach out 5,000 families and make a difference. And I believe if we all can tap in within ourselves to help people, this world will be a different place.
No doubt. What I'm going to do, if that went past kind of fast, I'm going to put the links below the video. Therefore, you can reach Andy directly on Instagram, his web page, and just contact him as far as like your situation, whether you want to do the credit repair and or get funding.
Yes.
And obviously, he has the strategic connections to basically allow you to leverage and improve your situation wherever you may be at in your process, whether you're just really just trying to fix your credit to purchase a home to live in, and or you're trying to get funding for an investment property. Definitely. And or business credit if you have, a t-shirt business, a car wash, growth financially overall. Exactly. It sounds like, and funding. So if you want to get to Andy, man, hit the links below, tap in with him, and we'll go from there. Man, I appreciate you for coming out, man. And I think it's important for people to know the back end of what we got going on here. Definitely. And the back end was that we both were individuals that teamed up with somebody that's doing major things in the industry, and that's Neo Davis, in Atlanta. He's from Philly, but he's in Atlanta right now. And we teamed up with Neo because Neo basically was teaching us how to expand our brands, grow our brands socially, and we were looking to grow. So we were students, and um, you, I let you know that I was working on a mastermind with some real estate investors, as I am trying to empower in my way, which is building wealth through real estate. You're trying to empower people through building, wealth through and getting the funding to start.
Exactly.
And it was just like, yo, whenever you need me, call me. I called you. You came here. You got your guy, and basically you're getting your content. I'm my goal tonight. I told you I'm going to team you up with my guys. It's just to connect you and just build. You know what I'm saying? So I think it's important for people to know that this is just not like a business transaction. There was no money really discussed. It's a situation to where you came in town and you was just like, yo, I'm here. What's happening?
Literally.
And so for me, I called all my guys. So we teaming up, we taking care of you, and we're linking up. And then tomorrow, you're empowering my students, and hopefully I'll be able to reciprocate the same thing in the future for your people whenever they're looking for assets. But I think that they need to know the back end to the context, just because it's not, we're just not talking it, we're actually doing it.
Exactly.
And we were students.
Exactly.
So we're humble enough to still understand that we're learning and we're growing in our own journeys. And it's just, relationships are the key to life.
Yeah, shout out to Neo for actually bringing us all together, and as we like to say, we run into play.
There it is.
What he taught us, we're literally running the play, and it's all happening organically. Like you said, there was no money exchange.
Terrence is even coming down.
Yeah,
I met Terrence.
My man T.
Yeah. Terrence. So I met Terrence in Miami.
Yeah.
With he got the cleaning service, and he's actually teaching people how to build six-figure cleaning services.
Yes, definitely.
Based on his platform and everything he got going on, and he's coming in to talk about just leadership and mindset, right?
Great brother coming in from Ohio, driving up. He should be here shortly. But yeah, we're all like minds, and we truly believe. When I say to the core, we have to be there for each other. We have to help each other build, and with that, it just happens organically. And you shared earlier, you hope to reciprocate it back to me, and to me, with your audience and your students that we're going to be talking to tomorrow. Just with them being empowered with the information I'm going to share, just with them actually taking what myself and Terrence are going to be talking about tomorrow, and them actually taking it and running with it and leveraging it, that's the payoff right there. Because it's not only assisting just them, it's assisting the kids that they have that are watching them. It's assisting the nieces and nephews that are watching them. It's assisting their families that never believed there was hope,
right,
that are watching them. It's more than just us. It's something that's going to go pass on for not just within them. It's going to spread out throughout their families.
No doubt.
Believe it or not, years to come, we're going to sit back and we're going to be looking at stories and listening to stories. And I truly believe that's where the blessings come in. And that's how we help build our community.
No doubt. And I just wanted to put that out there, just therefore they knew that it's the authentic truth.
Yes,
you know what I mean? And that it's possible. And I always have said that, a lot of us get caught up with networking, or we're going to this cigar bar, this hookah lounge to talk about this play. Mm-hmm. And the truth is, lots of times that's just like busy, just like ideas and shit in the air. The truth is that I feel you make the best connections in the classroom because, two, there are mentors there, so there's guidance. Mm-hmm. Then the rest of the people are individuals who are taking action. And you also are amongst those with a certain mindset of personal improvement. And they're aware that they don't know it all. Exactly. Therefore, they're there to try to get it all.
Exactly.
Yeah.
And exactly like you just shared, in that room, we had several businesses that were doing extremely well, but yet they still made time and intentionally brought themselves down to be able to learn and to expand. And, again, it's not just for self. We're all looking to help build and help each other build.
Yeah, no doubt.
That's a great thing. Shout out to Neo. That's the man there.
No doubt. So, man, we're going to wrap it up there, man. That's another episode of First Generation Wealth Builders, man. Thank you for tuning in. Make sure to share and like this episode, man. Tell a friend to tell a friend, man. It's going down over here. I'll see you on the other side.
Definitely. Thank you for having me, bro.